We have with us Nick Walker, Chief Executive Officer for Cairn Oil and Gas. Thanks for talking to us, Nick. Let's start with what's the most hot topic right now in the energy space. Oil remains as volatile as ever. We are seeing it at $75 below mark. So what's your current view on how oil looks for 2023 in terms of both demand, supply, the whole global outlook of it, and where do you see these prices heading? I get you may not want to give a indicative price there, but what factors is of interest to you here?
Yeah, well, good afternoon. It's a good question, and I think my perspective is that over a long period of time, there's been a lack of investment in new supplies of oil and gas, and then when you combine that with political problems, geopolitical problems around the world, then that drives the energy pricing. And so, my view is we will see strong oil prices and gas prices looking forward. But we will also see volatility like we've always seen. And so we plan our business to be able to cope with that volatility.
So your appointment at Cairn Oil and Gas has been a recent one. So what's your view on the Indian market? How do you see it? How different is it from the other markets that you worked in? What are the challenges? What are the opportunities? How does the demand look for near term and long term?
Well, if you look at the Indian market, demand for energy is growing very strongly, and it relies heavily on imported oil and gas. About 85% of oil today and 50% of gas. And Cairns got a unique position. We're the largest independent producer in India. We produce around 25% of the country's oil. And I think we've got a great asset base and a lot of exploration opportunity. And I think there's a great opportunity for us to grow our production base and continue to support India's energy demand looking forward. And the best supply of oil and gas is in India is oil and gas produced in India, and so that's our ambition. And we have an ambition to grow from around 25% of oil production today to around 50% from our asset base.
So how do you get to that 50% marker? You're half past that. What's the plan? What's the timeline? What could be the challenges? Where would the focus be?
We have an exciting asset base from our major Rajasthan operation, which you visited, but also some offshore facilities which are producing, and a big exploration footprint around the country. And we intend we've got some near-term growth opportunities in all of our assets, which we intend to invest into, and we have longer-term exploration opportunities, which we also intend to pursue. So I think a combination of investment in near-term, medium-term, and longer-term asset growth opportunities is what will provide the growth from our business.
You mentioned the Rajasthan block. I have a couple of questions on that block. One, you were seeking an extension beyond the 2030 of the contract that you have for these RJ blocks. So is there an update there?
No, I think we've got a great opportunity to continue to invest in that. There's a lot of opportunity. If you look, there's around 6 billion barrels of discovered resource in the ground, and we've produced around 12% today. And so we've got ambitious programs to continue to invest into that, and that's what we aim to do.
Okay. And also the shale exploration that you were looking at Rajasthan, at Barmer specifically. What's the update there?
Yeah, of course, shale oil and gas has worked very well in other parts of the world, particularly in North America and other places. And this is about exploiting the resource that's in the source rock that created the oil and gas. And we have some very interesting opportunities in Rajasthan to do that here. And but it's at the early stages. It's like an exploration play. We need to test whether it works. We've drilled our first well, and it looks encouraging. And so we're planning further steps. But this is one of the longer term opportunities that we have. But we intend to go after it and exploit it. But as I say, we have many other opportunities to grow our business as well.
So just a follow-up question on shale. Given where we are seeing oil prices lower, moving on the weaker side of $75. So Does that impact your decisions on this side, or would the long-term decisions remain intact?
As I say, we have a portfolio of opportunities to invest into. I anticipate around 2/3 of our capital spend looking forward will go into near-term development opportunities, which provide more or less, very short-term production results. And then around 1/3 of our capital spend to go into more exploration, longer-term opportunities, which I classify shale in the unconventional shale opportunity. And so we will invest into both.
Okay. So is there a part of that kitty that you would have earmarked for acquisitions, both in India as well as outside India?
We will always look at acquisitions, but my view is the best way to create value in oil and gas business is through the subsurface and being successful in exploiting the resource base that we have and exploration. And so, that's number one priority, is to maximize the value and opportunity both for the government and people of India in the asset base that we have, but also for our shareholders. And and if right acquisition opportunity comes along that we can do at the right price, then those are the sort of things we will look at too.
So of the fields that you have, the other fields that you have in India, last year in 2022, you also signed contracts for about 8 fields under the DSF auctions, the Discovered Small Fields auctions. What's the status there? By when do we see production? What's the likelihood there?
Yeah, so we're studying those opportunities, and we will move the ones forward that we can make happen. And I reviewed one yesterday. We have our Cambay field in Surat, and one of the discovered small fields, or 2 of them actually, sit near to it. And we have plans to move development of those forward, and we're starting the engineering work. And it's the same on all the other plots. We're continuing to study. It's early days, but when we've moved them to a point of ready to commit to the project, then we will do it.
A couple of questions specific to India, especially from the point of view that you are into the oil exploration business in India. There's a windfall tax right now, which was introduced because crude was about $100. How do you see that impacting E&P in India from 2 points? One, the short-term impact, definitely. And second, the long-term impact of it. Do you expect policies like windfall taxes to negatively impact any interest that India's E&P sector can attract?
I mean, I think you need to look at the various contracts that we have, and we have some older PSC contracts which are structured actually as high oil prices are there for the government to take more and more take, and I think they're fair in that respect. And so we've been in discussion with government around the windfall tax, and hopeful that they'll reconsider and take that away. Really what's important is to create a climate for investment long term into the industry, and I think government in India has done a lot of good work around the new exploration blocks to create that environment to attract investment. And as we invest into some of the more older contracts, it gets harder and harder to produce the oil, and more expensive. And we just need to create a climate that allows that investment to happen.
Fair point. So while companies like yours plan a longer vision of increasing capacity, like you have a 50% target of meeting 50% of India's domestic oil production targets, how do you juxtapose this with the energy transition that's happening in India as well as world over? Where do you see that trajectory, both for your company as well as the industry in India, globally? And do you see that being impacted because of the entire volatility that we see on the oil side?
No, it's a really good question, and we fully embrace the energy transition, the need to move to forms of energy, and also to decarbonize our oil and gas production, which is really important. But I think when you look at it, this isn't going to happen overnight, and what's really important is that we maintain stability, and the important thing is to be able to provide affordable and secure energy, and hopefully produced at home. to Indian consumers over decades that we're going to be needing it, and that is our aim as a company.
Just one final question. While you also look at decarbonization, there's also a shift in preference, or the demand for fuels is shifting to non-fossil fuels. Because someone like Cairn, an oil-producing company, is focused on fossil fuels. So what is the long-term map? If I'm not wrong, Cairn also has a net zero target of 2050. Correct me if I'm wrong. So how do you transition there in terms of business, not just the decarbonization, but what would be the other portfolios that you can look for?
As I say, I think oil and gas will be used in a material form of energy supply for decades in India, whatever scenario you look at, not just in India, but around the world. But what's really important is we do it in a way that we reduce our carbon for every barrel or molecule produced in gas. And that's what we're about. We have an aggressive plan to reduce our emissions, and we're doing some really good things. For example, we use a lot of power in Rajasthan, where you visited, and what we've done is recently committed to some solar power, which will replace the power we take out of the grid, which is coal-fired power, and so it's more sustainable, of course, but it's actually lower cost, so it's really good business for us. We're doing other things around this, many other things actually, and another good example is that we've committed to plant 2 million trees. We've done around 600,000 of them, and that's another area where we think we can reduce our footprint as a business. So our aim is that over time that we significantly reduce the amount of carbon that we emit as a company in the production of our barrels, which is just absolutely the right thing to do.
Thank you. Thanks for talking to us.
Thank you very much. Thank you for your time.